Welcome to Stuck to Strong Boardroom Reflections, episode number 2. We have Erika Rosenthal. I came across Erika because we are both sitting on the same panel at CXO 2.0, so I reached out to her. And I decided that we had a preliminary conversation and we found lots of areas of alignment and interest, and I was really intrigued with her vision of how to help investors evaluate business risk. And she has come to that area from an interesting journey, and I'm going to let Erika start off with her origin story.
Okay.
Go ahead, Erika.
It is a very non-linear path. I started my first decade working for Sprint Corporation, large corporation in the 80s, relocated 9 times in 10 years, went back to business school while still working, and I caught the entrepreneurial bug. And in the 90s, I opened my first medical spa, which was a management services organization for doctors who preferred to do surgery and not so much the business. So I said, I'll take the business, combine it with these spa services, and grow it. And did that for a decade. And then I actually went to work for a private equity group that was going to invest in a med spa roll-up. But 2008 happened in the market. And so I stayed with private equity investment in the last decade plus has been growing companies for exit. And I've done that over and over again. And now I have, in my 4th decade, I have a consulting company that does the same, but on a faster process. I'm not inside the organization. I'm jumping in when they need it the most.
You kind of dated yourself with all the decades in it.
I did. I did. Let's edit that out.
Well, that's nice that you're very comfortable with that. In our initial conversation, you and I were talking about risk versus innovation, and you operate at an intersection in that between private equity and business. And how do you, and I asked you that question in our earlier conversation, how do you balance and help investors decide when the risk is worth entering it, and when it is actually enabling innovation, and when the risk is actually becoming a liability?
Okay, all right. I think in today's world, there's risk everywhere because the ground is constantly changing. Tariffs, for instance, we can look at anything, and the ground is shifting. So risk in and of itself is not a bad thing. It's looking at people's tolerance for the risk, and is the business, is it bounded in time, and is what they're trying to achieve measurable? And then what is the outcome for it? Does that outweigh the risk? If it's healthcare, for instance, and it's medical, and it has the ability to save lives, then it's not difficult to measure. And then going through a process of asking questions about the team and all the considerations, what ifs, scenarios, and looking at their ability to pivot. Because if they wait for stability, they may never get started, and the competition may go right on by.
Absolutely, absolutely. So that brings me to another statement that you made, and I wrote it down. Don't let fear of the unknown restrain you.
Right.
So how do you express that to your investment board, where they're looking at millions of dollars and they are looking at what is the return on investment, what is the odds that they will actually make something meaningful worth that investment. I know that a lot of venture capitals, they play it very much like a blackjack game. They know that they're going to lose out on 9 out of 10, but they expect the 10th to make up all their losses and some. But having said that, you still, at the time of decision making, they are expecting each one of those decisions to be the 10th. So how do you do that?
Right. Well, and private equity is dealing with larger numbers, and they don't have, they're stewards of other people's money, so they don't have quite the leeway. They have reduced risk because they have a fund and a portfolio, but it's different from venture capital. So
I'm glad you made that distinction. Yeah, go ahead.
So on the private equity, they're pretty good at doing that unless they're in a field that's a little bit different from their background and their comfort level, which is when they'll call in. And it's important to know, and in looking at the operating team, have they anchored on truth, trajectory, and tolerance of risk? And those 3 T's. The truth is, are we fully disclosing and fully comfortable with what we do know and what we don't know before we move forward? The trajectory is how fast can it ramp up and how quickly can we get those returns on investment? Because private equity is interested in speed and return on investment. Those are 2 things that they're measured by.
So truth, trajectory, and what's the last T?
Tolerance for risk.
Tolerance of risk.
Which that's a big shape-shifting area right now. I call this the land of VUCA.
Mm-hmm.
And VUCA being volatility, uncertainty, complexity, and ambiguity. And this was actually a term that is now people are stating this is the leadership world that we're in right now. But that term came out of the 80s when the post-Cold War era, when the world powers were shifting. And it was no longer the Soviet Union and the United States as the world powers, and things that were very predictable. If this happens over here, then this will happen here. And that world started shifting, and we're in that now with the world of AI and the pace of change.
Plus the geopolitical shifts that are happening all the time.
Absolutely, everywhere. So I think stability, looking for stability, there was a time when we would wait it out, and investors would say, if the boat's rocking, we're going to sit down in the boat and we're going to wait for stability, and stability would always come.
Mm-hmm.
Now, it's who can predict what's going to happen? We know there's investment and there are dollars that are pent up waiting for deployment. We can't wait forever, so we've got to make decisions in a ground of uncertainty. And I think that's not bad. Innovation in and of itself means uncertainty. You can't prove out innovation. You can do the best that you can, but in going in, and I want to give you an example with one story. Okay, for a quick story?
Absolutely.
Okay. This was during COVID, and we were invested in a mental health organization that was outpatient. And so lots of providers seeing patients in office for psychiatry or psychology. And all of a sudden, everything stopped and came to a halt. And they said, we're shutting down, go home. Well, that's the biggest time that patients had a need. Everything was happening. And so we didn't anticipate that. We didn't anticipate COVID. Who could? Only 10% of our entire base was using telehealth. So the management team came together. Nobody had the answers, but we discussed around the table and with our investors, here's what the scenario looks like. Here's our choice, here are our choices. We can go home and hope for the best and hope for it to subside, or we can make a few phone calls and we can try and pivot and get everybody on telehealth in 2 weeks, trained, operational, and we can see patients. And it felt like an impossible task when, how are we going to train people remotely? How are we going to make all of this happen? But everybody agreed that to wait it out would be irresponsible for the people that had a need. And so we got with vendors, our providers, and we said, can you help us make this happen? And they did. And what resulted was we had the fastest trajectory, faster than we ever anticipated, because we were able to make that pivot. And everybody knew that, in the beginning, we don't have the answers right now. It may be a bumpy road. And we were very honest about that with everybody. We don't know in rural areas if the internet's going to go down. We're going to be finding our way, but we're doing this so that we can help more patients. And we did.
To see opportunity in catastrophe.
Absolutely.
That's so similar to our own COVID story that I shared with you earlier, that the ability to lean in at the time of uncertainty and to feel your way forward without losing sight of the vision.
Right.
And
right.
that is a very, I don't think it should be said as a rare trait, but it is a very valuable trait. And something that a lot of leaders and founders and entrepreneurs struggle to consistently create. And so what was the operational principle that you held on to that allowed you to not get paralyzed by the total closure of businesses and the distancing rules that came about in COVID, and be able to pivot? What vision did you have for your project that allowed you to pivot and actually innovate? Because that was innovation right there. The technology was there, telehealth was there.
It was there.
But the penetration was not there. The other elements that allowed for rapid deployment and scale was not there, and you had to solve those problems. But before you actually solve the details of those problems, you needed to have a vision of your organization and of what it was about and what it was at stake. So tell us a little bit about that, because that is the key to the boardroom reflection that I want to get out.
That's really what held us together, was that vision. We said healthcare begins with mind care. So if we were to shut down and go home and listen to all the headlines about people suffering and the stories that they were going through without being there when they needed this kind of professional help the most, I can't imagine a greater failure and something to be ashamed of if we didn't try. And that is, not knowing the outcome, not knowing how we were going to do charting, billing, all the complexities that exist in a healthcare ecosystem to make it work. Mm-hmm. Complexity can kill scale.
Yes.
That is true. But boiling it down to what's really simple, and it is getting that provider and that patient together where they can exchange information, get a diagnosis, get as much of that done as possible. Everything else can be figured out in the background. And we knew we could figure it out. And we had some long nights. Our investors were right there with us. They were making phone calls. They leaned into it. Now, what could have happened then, and I've been on both sides as an investor and as an operator, that's when friction forms. And an investor could say, you figure it out. You need to figure it out, because we're on the line. Or they could say, what do you need? And how can we help you? And that's what they did in our case. And we had some answers for them on how they could help us. And it was a divide and conquer. We put everybody in their stream and said, make a decision. You're the closest to it. We identified exactly where the decision needed to be made. We said, we're going to come back to this table, this, theoretical table, which was Zoom, and we're going to make sure that we're all aligned in what's taking place. We're going to help each other solve the problems for the functional areas. We're going to communicate with the providers, and we're going to understand what everybody needs, and we're going to make it happen. And I still look back and have no idea how that came together in 2 weeks to start seeing patients. But it did. And thank goodness we were able to help a lot of people. But what that resulted in is one of the highest exits that the company had ever seen.
So healthcare begins with mind care. That's something that we did too in COVID. We said that the virus is not the first disease. Fear is the first contagion.
Right.
And at all times, we have to operate to eliminate fear. And we are going to be a space where fear is not allowed to. So we used to call ourselves, we used to have our team meetings in the morning before we start seeing our patients. We were seeing 100 patients per provider per day during COVID because we were the only clinic open. The other clinics had all closed. And so, you know how in Lord of the Rings, there's the Balrog and Gandalf the Grey says, you shall not pass. So we used to end our meeting by saying, you shall not pass. It was so funny.
And so everybody got closer for a common
fear shall
cause.
not pass, the virus shall not pass, you shall not pass. That's it.
Right.
That is unbelievable.
Right.
That is so great. When you look at the investors and operators, all right, and what is the biggest stumbling block between them? And how do you allow this relationship to be redesigned for a more optimal outcome?
I think in any relationship, there's always going to be friction, right, that arises. And we're usually called in when the friction is there. But noticing it and putting it on the table and going back to the truth.
Yes.
What do we know beyond a shadow of a doubt? What are we confident in? What do we not know? How are we going to test this? What decisions are we going to make? And being very upfront. And I think the worst thing that can happen when the operators say, I need to have an answer so I look good in front of my investors. But they're not confident in that answer. If they're not confident in the answer, say you're not confident. This is what we know. This is what we don't know. And be totally transparent, because investors will trust honesty, but if they trust an answer and that answer turns out to be completely wrong, that has an erosion of trust.
Yes.
The most important thing an operator has is their customer's trust. It's all the same thing. And so we have to be honest with each other, and we have to ask for help when we need it, and say, one thing that we don't know because we don't have the bench strength here, we could use the help here, help us find the bench strength. That's what investors do best. They know a lot of people. They know who's got strength in a particular area. They can mobilize it and bring it in.
About integrity with relation to their word, and not looking good about it, but rather looking honest about it, authentic about it.
That's right.
and the ability to stand in that truth.
That's right. I mean, on the investor side, I recently went to an investor pitch, and the CEO was talking, and this was more the venture capital, very new, and they were confident in their device, but it had never been used before. So their market evaluation of who needed it, that was all very solid. There were a million things that could go wrong. And so I started asking the questions about things that could potentially go wrong. And the CEO stopped and answered very truthfully. She said, I don't know the full answer to your question, but I do know we have this person, this person, this person on the team. We could pull that together and we could get an answer with the team. I trust my team.
Mm-hmm.
And if it turns out we don't know and that answer is wrong, we have the ability to pivot. I invested because she was honest. She was truthful in what she did know and what she didn't know, and I felt more comfortable with that than a made-up answer.
So the transparency allowed for a greater comfort with uncertainty, because the transparency gave the little bit of anchoring in truth that allowed the volatility and the uncertainty to be handled, or at least hope to be handled.
That's right. That's right. That's right. It was her process. She had a framework. I don't remember the details of that framework, but she had a framework that everybody could come together and start to tackle those issues. And that's what you need to know. You're not totally lost. You've got something you can go to, a process.
So if you're going back to your VUCA statement, where you have volatility, you have uncertainty, and what are the other CNA?
Complexity
And
ambiguity.
So, but they all come into the domain of, I don't know that I don't know.
Right.
You have, I know, I know that I don't know. So even that is a form of knowledge.
That's right.
And then there are the things that you don't even know that you don't know. And VUCA falls into this, don't know that you don't know. But the ability to have transparency, willingness to stand in your truth and authenticity allows you a grounding area, a place to stand where you can actually stand and act like the lever for handling this VUCA zone.
That's exactly right. I don't think it's going to stabilize anytime soon. I think that is
VUCA is never going to go away. It's a state of life.
And increasingly so. AI is increasing that complexity, and AI is still unfolding. So there's so much that we don't know. Deloitte has statistics that everybody's deploying just about, but very few are really utilizing.
No, yeah,
it.
Absolutely.
And so
right
we don't
now it's
know.
a supercharged encyclopedia.
Right. And so I think we can't wait for it to be all sorted out. We've got to go test it, and we've got to make it a part of our day-to-day so we learn with it.
So I love this VUCA because a while ago, in another conversation in another location, I spoke about VUCA, about that VUCA is basically a fundamental characteristic of life. Life is unpredictable by definition, and all creatures, in that conversation I said, all creatures, whether it is a single cellular organism like an amoeba or the most complex, highest evolved human being, they operate always to predict what is likely to happen in the next 5 minutes and position themselves such that they can either avoid a disadvantage or gain an advantage. And that's all that people do all the time. So the nature of all creatures is this prediction-seeking nature. And in that analogy, I said that the tiger that cannot predict where the deer is going to appear is going to go hungry. the deer that cannot predict where the tiger is going to appear is going to get eaten. So this nature, this prediction-seeking behavior is the basis of human learning.
Yes.
Humans learn so that they can predict what is likely to happen, and they form patterns of past experiences and use it as templates to compare what is happening right now, and then try to mix and match. And okay, this strategy worked in the past, and this situation looks like that, so I'm going to use this strategy.
Mm-hmm.
From a practical standpoint, that methodology of templating out experiences in the form of pattern matching with past experience and using it to solve new problems based on pattern matching allows for speed and efficiency, but it carries the risk in completely ambiguous situations where a new environmental challenge may resemble something in the past and fool you into reaching into your grab bag for an old, outdated playbook.
Yes.
And then you are locked into, and you don't know until you have executed that playbook and gone sufficiently far down the road, only to realize that, hey, this playbook doesn't work in this situation. This situation looked like, but now I got to pivot, and sometimes you lose out. So how do you learn from ambiguity such that you don't throw away your playbooks, you keep your playbooks, but stand in a place of ambiguity where you're able to see ambiguity, able to gauge the new situation? So how do you live in ambiguity? How do you accept ambiguity to an extent and yet be able to reach for an old playbook and not reach for it if you sense that this new thing is not really something that will pattern? So how do you keep that mindset, that razor's edge of reaching for an answer and remaining open?
I think what is going to separate the...
And how, as somebody who works with investment boards, because the investment board is going to reach for answers.
Right.
By nature, they'll reach for an answer. And they have this vast playbook of old answers that worked.
Right.
And you are standing there helping them deal with ambiguity and not grab the convenient answer. So how do you negotiate that?
First, it's not wrong to reach for the old playbook. What's right is asking the question that you asked. Does this still serve us in today's market? And the market has plenty of signals. We know ahead of time when demand is up in a particular area or demand is down. If you bring the market together with the playbook and start asking what has shifted in today's market that poses more risk in deploying these. Should we be deploying something differently? If you're having those conversations, then that's the right thing. That's more heads problem solving. The downside would be just taking the playbook and say, we've seen this before, let's apply it, and everything will go swimmingly well. That's not including uncertainty of all the things that are shifting. Should we have done that before with old playbooks? It probably would have been a good thing to do then too, but now it's survival.
At this point in your career, what inflection points did you have going through your career through Fortune 500 and then coming to this point? Can you take me through that?
So many. Probably the biggest one was leaving corporate America to be the decision maker on my own company, starting a company with multiple people where people wanted me to have the answers, and I wanted to have the answers. I didn't have all the answers, and I didn't even realize how many answers I didn't have until I got into it.
Yeah.
It was the confidence of youth going in that, oh, we'll solve it.
Yeah.
And I think that having some bruised knees, some skinned up knees, some battle scars, if you will, humbled me. And I got very comfortable with saying I don't have all of the answers, but I do know what questions I should be asking. And being able to connect with other people that had more experience and gain some more insight before formulating a strategy. It should be insight, strategy, execution. And I think a lot of times people say, let's go right to execution. And it's not don't start, but you've got to have insights from the market, from what's happened before. You've got to marry that with strategy, and then you've got to have execution that's manageable. So I think it's really putting all of that together.
If you were to go to an investment board right now, what is the one biggest, message or something that you would say, this is something that we need to spend a lot of time cultivating? What is the one thing that you would like to have investment boards cultivate?
Cultivate?
Yeah.
That's a good question. I would go, and actually you asked for two scenarios. One
Yes.
of them overlaps with this. It's the same one. When I decided to do a roll-up of medical spas, because there was no national brand, nobody had done it, back at this time, and do a roll-up, I went on the campaign trail, as I called it, for dollars, for investment dollars. I was thinking like a CEO. I was not thinking like an investor. And I talk about being out of my comfort zone. My first 3 meetings were I was riddled with bullet holes. I was not coming from the same vantage point than they were. And so I really had to learn the investor standpoint. So I would say, again, if I'm going to an investment board, I'm going to want to know what's important to them. They usually have an investment thesis. Does this business fit their investment thesis? Help me understand it. And how great is the pain that we're trying to solve? With any business, we're trying to solve a problem in a market. How pervasive is that pain? The greater the pain, the more desire
For a solution.
there is to solve it. And only take the opportunities that have that meat around them to the investors, but not before doing your homework. Never walk into one blindly without knowing what's important to them and even what may be missing in their portfolio.
Do you get to learn their investment thesis beforehand? They do tell you that.
You can do your homework. You may not be getting it from the person you're presenting to.
Yeah.
That's okay. But you can get it. You can get it from other operators who are in that portfolio already. There needs to be a match between their desire and your desire.
Absolutely. This is 2026. 3 years down the road, 2029. Where do you see yourself and your company being? Do you see yourself in 3 years?
I would hope in 3 years we've got a world where nobody's sitting back waiting for someone else to solve the problem, that people are leaning in to the problem and applying their unique skills as a community of investors and operators. And the degree of friction of this is your job, this is my job, is blurred. This is ours, and together we can solve this.
So a kind of, it's a we mentality rather than an us versus them mentality.
That's right. That's right. And sometimes I hear it's too slow. Let's replace the leadership team. We want everybody out. We want more in. What's going to happen when the pace of change is going so fast, and you have to change out even key people on your leadership team? You may have to do that in some cases, but that shouldn't be, that should be the last resort, not the first resort, because that's going to allow the competition to get ahead. So if you understand the problem, it's not me versus you, it's us triangulating towards the problem. That's what I hope to see, and I hope we can help with that.
Awesome, awesome. That's it for Stuck to Strong Boardroom Reflections Episode 2. This is Erika Rosenthal of Veritas. Right? Erika, it was such a pleasure. Thank you.
Thank you so much.